Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and We're going to go ahead and talk about Oak Street Health. It literally has surged 29.7% after the Wall Street Journal reported that CVS Health was close to an agreement to buy the primary care provider. All right. So why am I talking about this? Why am I bringing this up to you at this time? Okay, so overall, this is fresh out of the news, near $35. Year to date, we're up 65%. Why am I discussing with you about Oak Health? Well, it is a negative free cash flow business. Just look at free cash flow. Look at the trailing 12 months. The free cash flow for Oak is negative. So what we're going to do in this video is we're going to calculate the intrinsic value using our mastering stock market proprietary information and calculating the intrinsic value of a negative free cash flow company. Now, you can talk to a lot of people out there in the world. They're going to tell you, oh, I had a lot, at least from the Reddit page, Dr. Reddit, a lot of people were saying, you know what, you really can't do this. You really can't really calculate this. And then I see them on some posts, they say, well, I'm trying to find a free template for a DCF. Where can I get one that's free? The free ones suck. Okay, let me just put it that way. I spent literally 10 years trying to figure this out, okay? And this is basically what I could come up with. And I believe that this is the best intrinsic value calculation that you can do for companies before Wall Street steps in. So what we're going to do in this video is we're going to go ahead and we're going to do a calculation on the intrinsic value of the Oak Street Health stock. We're going to see if CVS Pharmacy is buying it at the correct price. So without further ado, let's stop wasting time and let's go ahead and do it. So what I'm going to do is I'm just going to take these numbers and put them here. So if you don't see them, I'm just going to, you can go back and forth, but I have them here on my other screen here. Okay. So 2021, they made, well, here, let me go ahead. It would help. Let me just kind of refresh it here. Just give it some time. All right. So 2021, they made about 1,433. That's about 1.4 billion. I guess we can, I guess now they made around, what's it, TTM 977. At first, we're going to go ahead and take a 5% revenue multiple to estimate the future free cash flow of the business. So by doing that, we could go ahead and get this. So by doing that, we get the estimated free cash flow. We're going to put it here. Doesn't matter what year you put it in. It just takes the average. So 71.65, 98.85, and then we're going to shoot them out 10 years. Now, what we can do is, because they're technically heavily net income negative, we could go ahead and just take the growth from 2010 to 2022. So we can do that. We could just take, let's do it. Let's do it that way. So I guess 2022, we got 9.77. And then in 2010? 2010, they got 682. So you get around a 9% growth. The thing is, that's not really correct, because if you look at their recent growth, they've been growing at 40%, right? They've been growing a lot, as you can see. If you were to look at this, the growth here, they started accelerating growth by a lot. So we're going to go ahead and package it up to the general average growth that Medicare is expected to grow in the next 10 years. And on average, it should be around 25%. So if you put 25% and you take it by the shares, which is 232, you get 232. You get a price target anywhere between a bull of 24 down to a recession of 6. But here's the thing. So if you do this is, again, I like to do an undervalued calculation. I always like to do undervalued. So I always do 5%, right? Somebody on Reddit, Dr. Reddit, told me on the Clover page, Al, 5% is too much. Do 1%. This guy doesn't know what he's talking about. Okay. So I hate to come off rude, but sometimes people on Reddit, you got to be careful who you listen to. There's a lot of folks claiming they know what they're talking about. So what most likely CVS did is they did around 8%, so 7 to 8%. So if we go ahead and go to Humana's free cash flow, and we could just go ahead and do that later. I'm not doing it in this video. It's too much time, but we can go ahead and do 7%. And if we do 7%, we just change these numbers to 100 and to 138. And would you look at that? Look at that, CVS. Look at that, $34.56. $34.56. So that what we just did is we took a negative free cash flow company, which is what Oak Health is. It is losing money, a negative free cash flow, and we use the revenue to estimate the future free cash flows. So let's go ahead and let's use 7% for Clover, and let's see what we get for Clover. Okay, we're just going to use 7%. We're not even going to use 5%. We're going to use 7%. So if we do Clover, let's assume what they're going to make, what, 2.3 billion. We're going to downgrade by $1 billion. We're not even going to put their $3 billion that they made last year. We're going to assume they're going to make 2.3 billion this year. Okay, and we're going to do 7% of that. Okay, by doing that, we should get 161 of free cash flow. We're going to push it out to 10 years, all the way up to 2032. We're going to go ahead and do 25%, and we're going to do 477. And would you look at that? This is what we get for Clover Health. Okay, and this is using 25% growth rate. And we know that they can grow more than that. We're just down regulating it on the path to profitability. So if you go ahead and put Clover stock, it's currently today trading at $1.26. You go ahead and put the current share price, $1.26. You're up on the recession, 3x your money. The bear, 8x your money. The base, 11x your money. And the bull, 1.17x your money. So, I mean, if you put in $1,000 and you 17x your money, that's $17,000. You put in $10,000, that's $170,000. You put $100,000, that's $1.7 million, et cetera, et cetera, et cetera. Now, the issue here, guys, is that unfortunately, when you go on Reddit, there are some people. There are people that are long-term holders. They know what they know what they're talking about. And then unfortunately, you get a mix of both sides. The difference between Oak Street is that they're owned a lot by institutions. Their institutions is really, and they're buying it at a premium too. They're, CVS, their institutions is quite marvelous. If I recall, I'm trying to, let's go to this video here I made for Clover's price projections using a different value metric, which we can do and apply it to Oak Street. But I had so many people here talk about how something with like Warren, I'm not like something with Warren Buffett or something. Someone commented saying, who the hell wants to hold for 10 years? I don't want to hold. I can wait till 20. I think it was one of these folks here. I guess the comment was removed by a moderator. Okay, good job on the moderating team. I really appreciate that. It was a silly comment. The comment was really, really silly, saying, I'm not like Warren Buffett. I'm here for the squeeze. Get out of here, dude. Get out of here. This is a company that's trying to change how healthcare is being basically looked at. And, I hate to tell retail investors this because this is a retail first channel, but, I'm starting to get annoyed of the short-term people. And honestly, I would hope if they sell so we can get more institutions so the price of Clover can ascend to its value. That's pretty much what we're waiting for right now. And that's what honestly Wall Street's waiting for, right? Because, at the end of the day, we're here to make money. We're not here to just, have people trade up and down stocks. So Clover's day is going to come. It's very clear. If you think a net income of $500 million but it's, it's being bought at its bull case value, even better. If you really want to, again, this is Clover and this is Oak Street. If you really want to get technical if you really, really, really want to get technical, what we can do is we can open up our stock terminal here. We can go on to our terminal. Where the hell is it? We can open up the terminal. I like to use the ones here. We go open up the terminal, and we could open up our automatic DCF, and we'll do Humana. If we do Humana, it calculates the WACC for you. Okay. And this is the WACC is, it's another way to calculate discount rate. The discount rate for essentially Humana is 6.2. Okay. Let's go ahead and calculate the discount rate for, let's say United Healthcare. Did I say, I think I put it in wrong. UNH, my bad. UNH. Typing up a little fast here. So if you look at Humana, 6.5. So let's just call it 6.5. Let's take the higher discount rate. So it's applying a Humana and a United Healthcare discount rate. So if you go to your discount rate here and you type in 6.5, right? Look at that price variance. That is exactly why CVS is trying to buy this company. That's why. Because if it uses a discount rate, if we wait for Oak Street to mature 10, 20 years from now, its discount rate's going to be 6.5% once they're a well-established company. Now, I know what you're thinking. You're like, well, what's the discount rate for Clover Health? If I'm going to go ahead and leave the video off there. I'm just kidding. I'm going to do it for you guys. If you put in 6.5 for Clover, this is exactly what we're basically getting at. And if you don't recall, the original price targets were near the $40 region. It's just the economic form and then also how much cash they were burning and management. We decreased the price target down to $25, right? We want to see them crawl, honestly, before they can walk. And they're doing that. But as you can see, there's potential here, right? But it's going to take 10 years, 10, 15 years. If it takes 2-3 years, great. But again, there's a lot of long-term holders. Okay. All right, guys. So that's all I have for you. I just wanted to just break this out and really kind of dissect this and show you, here's CVS. Okay. And here's how we normally do intrinsic value. And you can see our intrinsic value is spot on to what a multi-billion-dollar company is willing to buy another company for. So I hope that this gives us some credibility to showing you exactly what we're doing and that reason why we've been featured on Yahoo Finance, Bloomberg, and we have clients from all around the world because the system works, okay? The system works. Anywho, if you guys want access to this, there'll be a link down below. That's all I have to say. If you guys want to change your life for the better, there's a pathway. Okay. But overall, I have a quick question here. Sorry. Do you think Clover moving earnings to pre-market a strategic bull move? Honestly, I can't. I don't know. I can't read Andrew Toy's mind. I can't. I don't know. We're just gonna, maybe they might say a reason. Maybe Andrew Toy has some indigestion problems, and maybe in the after hours he has a little gas, and he likes the pre-market. I'm making a joke, and I'm sorry, Andrew, for saying that. You know what I mean? I'm sorry about that. I really don't know. I don't know why he does that, right? I'm making a joke. I'm not saying he has any gas problems, okay? But your guess is as good as mine. All I know is I'm looking at the data. I like to keep it data orientated. I'm all about the data. Okay. That's all I care about. That's literally all I care about. That's all I care about. Right. If there's no data, then I don't have I'm a normal human being. Data makes me feel like a superhero. Right. All right. You're laughing, right? I know, honestly, what am I going to say, guys? Maybe he has some gas in the after hours. So, he doesn't want to fart in front of all the investors. I don't know. I'm sorry. This is going really, really unprofessional. My apologies, but like, what am I don't know, guys. I don't know. And I'm honest to tell you, when when you guys give me a question, if I don't know, I'll tell you I don't know. Yeah. But when I do know, when the intrinsic value, I'll tell you, no, this is what I think is happening, right? But definitely comment down below what you guys think, and let's see here. Damn, I was writing Toy has gas problems in my notebook. Oh man, I feel bad for Andrew Toy. Hopefully, he doesn't get any comments on his LinkedIn. That'll be there. Please don't, guys. Just say that. All right, let's leave it there. All right, guys. Little lack of sleep. Been studying a lot. Been working hard, studying a lot, trying to impress my surgery mentor. He's very cool, and he pushes me hard and he challenges me. So my lack of sleep has made me a little funky. That's why I am not having video on right now, because I need a haircut. I look crazy, but it's okay. It's a part of surgery. I love you guys a lot, and I hope that a lot of millionaires are going to come into fruition in the next 10 to 15 years. And it'll be good. So yes, that's what it's what my whole CLOV thesis is hanging on now, right? The gas. Well, hopefully it's enough rocket fuel for liftoff. Okay, that's the last one. I'm done. God bless you guys. I'll see you on the next one.